So the Journal rolled this out this week and said slowest pace in 18 months. How serious is it?
At this point, not as much. 2018 appears that the companies really bulked up on the buybacks. They got the sugar high from the first time the tax numbers came in, so they increased it. They wanted to show shareholder return, how much they were doing. So they had dividends and buybacks. If you increase dividends, you can't pull them back. Buybacks, as we see now, they can pick up the phone and just stop the trading in 2 seconds. So it's definitely a big decrease from last year. You look at prior to that, 2017 and before, then it's still an increase. The question is what they're doing. Where do we reset the level of buybacks now, which Q3 will tell us, and where do we put the support? Because that buybacks support the stocks and help the EPS, as you said.
This argument that they didn't step in May the way we thought, how were you surprised?
A lot of people were surprised. I was one of them, they didn't go back in and make the bold statements they did, let's say, like they did in Q1 2016, how great their stock is. It's just the market we're going in to buy. And they have buying they have to do for options. So they could have done it. They chose not to. So the question is, did they intentionally know that they wanted to do less buying because they bulked up so much last year?
How much of this is being changed by Apple, just the size of Apple? Do we need an ex-Apple figure?
It still is bad. Apple, Microsoft, basically it's up and down the line. They've all cut down. Financials down about 23%. Financials down about 12%. They were less than the other ones because they've got to get their stuff approved, and you know about where they're going to be. But it was a broad decline across there. So again, is the new level 160 as compared to the 200 billion? Or are they going to, if they decrease, then there's a big concern on it.
Right. I mean, I think there was a $4 trillion number since 2013 in overall buybacks.
20 years is 7.7 trillion with a
20
T.
years. I mean, that's an astounding number.
Enormous.
I don't know what our market cap is, right? I mean, it's,
S&P is 24.
Thank you. 20. Okay, so that gives you a sense. It's more than it's a third, roughly, almost.
Earnings were 13 trillion over that time.
What did that add to EPS over that, or even over a more or a shorter time frame? What are we talking
on an individual issue? Again, 1 in 4 companies have hiked their earnings because of that. When you look at the net income is up so much and the EPS is up that much more. Even like you spoke Apple, which was down, they were down 2% on the EPS, but they were down 8% on net income. Different series of numbers. So that 1 in 4 companies have actually boosted up their earnings. And you really need to know the difference because you don't want to pay the same PE for buybacks as you do for actual growth. On an index level, it's negligible. We back into millions of dollars. So you can buy back every share and have one and have $1 billion EPS. Doesn't make a difference. We multiply it out because we have 500 companies. So on the index level, not too much on the EPS. It gives support, obviously, but on the issue level, 1 in 4. You can throw darts and find them.
So how do you explain to people the why of slowing buybacks? Is it just, not as much cash because the tax cuts are weighing off?
No, the cash is up there. A little bit. Second quarter looks like it's a little bit shy of $1.4 trillion for the industrials alone. They have enough to do buybacks, dividends, M&A, even hire a couple people here. As compared to abroad. It's what they choose to do, and apparently they've chosen to cut back on discretionary buyback. They're still buying enough to negate all the options. It's the discretionary ones, and that's the expensive ones, and those are the ones that come from the top, the board of directors, not a senior management person making that decision.
Do we think that buybacks will go back to either below CapEx or below cash flow for the year?
Not below cash flow, because cash flow is pretty good, especially when you add in the option money into there. So again, they have plenty of cash. But we're looking for the 160, 170 as a support level. That's where it is. If it goes back to that 130, you've got less buying. And the big question is, why did you guys cut back so much? And what are you doing with your money? Because we're not seeing it go somewhere else.
Sitting on it potentially because of the uncertainty. You just indicated it's an important point. It's a board of directors decision in terms of capital allocation that they're going to get involved with. And they may very well be saying, let's just sit back for a little bit.
Right, and that's just keeping it ready, the gunpowder there, because they're not making money in the banks on it. That's for sure.